Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be comparing some of the data that we have for AMC and Workhorse to see what is the better investment, what is more likely to squeeze, and there's a lot of differences here. And we're going to be going over every single last one of them. So if you guys appreciate these videos, make sure you guys leave that early thumbs up on the video, as it's the #1 thing to help out a small content creator like myself. I don't have too much to talk about before we get into the video, so let's get right into the video. Alright, so we're just going to take a look at a few of the basics here. So here's AMC's chart. It's at $59.45 as of closing yesterday. And we can see if we go out to the week, we're up 14.68% on the week. On the month, we're up 363%, which is absolutely insane. 3 months, 320%. And then on the year, it's up 858.87%. Now, if we look at Workhorse, Workhorse is at $14.83 per share. On the week, it's down 7.49%. On the 1 month, it's up 72.84%. On 3 months, it's down 4.08%. And on the year, it's up 182.48%. Some other important aspects of a short squeeze, although they're not the only things that are important, but they are very, very important, are the short interest percentage, the shares outstanding for float, so the float of the stock, and the market cap of the stock. So the short interest percentage on AMC is 13.45%. The float for AMC is 448 million shares, and the current market cap is $29.74 billion. For Workhorse, the short interest percentage is 60.03%. So that means 60.03% of the float is being shorted on Workhorse. The float is 112 million shares, and the market cap is $1.83 billion. Now, just looking at these numbers alone, you might just think, oh, Workhorse is dominating AMC, let's just switch to Workhorse. Well, hold up for a second, because there's definitely more involved in this than just those numbers. Alright, so here we are on Ortex for AMC, and I brought up another thing. So it's on loan average age. So in the light green, that's the average age that shares have been on loan, which helps us get an accurate price prediction of what these shares were shorted at. So AMC, the average age of shares that are on loan are 44 days. And the average age for shares on loan for Workhorse are 49 days. So as you guys can see, highlighted in red on this spreadsheet is basically what I believe is the average price for shorted shares. So if you basically just took every share that has been short and you got the average price, that is what it would be. So for AMC, it is $9.50 per share. If you take the price of AMC 44 days ago, which is the average days on loan, you'll get $9.50. For Workhorse, if you take the price of Workhorse 49 days ago and you get the average price, that's $12.30 per share. The current amount of shares shorted for each of these stocks, so it's about 68.79 million for AMC and 69 million for Workhorse. And with all these numbers, we can estimate the loss for shorts on each of these stocks. So to get these values right here, you take the current price of the share, subtract it from the average price, so the average shorted price, and then you multiply it by the shares that have been shorted. So that would bring us to a loss of $3.4 billion for AMC and $176 million for Workhorse. So the shorts are currently losing right now in both of these stocks. Then we can predict what the market cap would be if every last short covered, and that's basically by taking the current market cap and then adding the estimated loss for shorts, which would bring us to $33 billion for AMC and then about $2 billion for Workhorse. And then that would let us predict what the total short squeeze gain percentage would be if every last short covered their position and there was zero short interest remaining on each of these stocks. So for AMC, the short squeeze gain would be about 11.55%, and then for Workhorse it would be about 9.66%. Now that would only be if every single short covered, which I'm sure not every short is going to cover, there are definitely some shorts that have diamond hands. So there are a lot of variables that are in place with these predictions, so just keep that in mind. And obviously none of this is financial advice. Please seek out a financial advisor first before investing, because I'm not a financial advisor. Alright, so that was pretty interesting, and it shows that if every short were to cover right now, there would be a bigger jump for AMC than Workhorse at these current numbers. If you would like up to $70 in free stock for depositing as little as $1, use the link in the description or the pinned comment section to sign up for Public. Public is a stock investing application that has an absolutely phenomenal user interface and great customer service. They're also like an investing social media type app, so it kind of just feels like a Twitter, but you can also buy and sell stocks. You can follow me on Public and you can see exactly what holdings I have on Public. You can also follow other people. There's other YouTubers like Graham Stephan and Meet Kevin who have Public, and from time to time they bring on CEOs, so you can actually ask CEOs questions on Public's investing platform and they will respond to you. So all in all, Public is just an amazing investing platform, great user interface, amazing customer service, unlike that of Robinhood. So if you're on Robinhood right now, I highly recommend you switch over to Public. And yeah, you get up to $70 just for signing up. Just make sure you fund your account with at least $1. And yeah, that's that. Let's get right back into the video. Now, let's just go over a few hypothetical situations. So let's just assume that there's a $2 billion market cap increase to each of these stocks. Now, this isn't even that wild of an idea because we've seen $2 billion market cap swings in AMC like almost every single day, so I don't even think this is that far-fetched. So if there was a $2 billion market cap increase from retail investors, you would see AMC being $31.7 billion in market cap, and Workhorse would jump up to $3.8 billion. This would give us a hypothetical price for AMC of $70.49 per share, and then for Workhorse at $31.23 per share. And then this would make the hypothetical loss for shorts around $4.2 billion for AMC and $1.3 billion for Workhorse. Then this would bring up the market cap if all shorts were to cover for AMC to around $36 billion, and then for Workhorse to around $5.1 billion. And if every single short were to cover, and the short squeeze percentage gain would be 13% for AMC and then 34% for Workhorse. However, the total gain percentage would be for AMC about 20%, but for Workhorse it would be 180%. Now this brings us to our last hypothetical situation, which would be Workhorse going all the way to AMC's market cap. Now, is it that likely that Workhorse makes it all the way to AMC's market cap? Absolutely not. AMC is a one-off event. This thing went to the absolute moon, and for that to be replicated, that's going to be a very difficult task. So I'll just say that up front right now. I don't really think Workhorse will actually make it to AMC's market cap. However, if it were to make it to AMC's market cap, this is what would happen. So that would mean that the hypothetical price for Workhorse is $242 per share. This would bring the hypothetical loss for shorts to up to $15.7 billion. Now, if we compare that to the current loss for shorts for AMC, they're only at $3.4 billion. So earlier when I was saying how Workhorse is just set up way better based off of the technicals alone for a short squeeze, this is what I mean. If Workhorse were to increase to the same market cap of AMC, shorts would be in the hole for billions and billions of dollars more than what AMC shorts are in the hole for right now, since AMC only really has a 13% short interest compared to Workhorse's 60% short interest. So that would mean the market cap, if all shorts were to cover, would be $45.4 billion. The short squeeze percent gain would be 52.84%. Now, how you get that number is basically you take the market cap if shorts were to cover of $45.4 billion, you divide it by the AMC market cap of $29.74 billion, and you get about a 52% increase if all shorts were to cover. But that would bring us to a total percentage gain of 2,384%. Now, you have to keep in mind that 52% increase that you're getting for the short squeeze, that's still a $15 billion loss for the shorts. So while a 52% increase doesn't seem like some enormous return, you have to keep in mind that 52% increase comes after everyone already bought up the shares, not before. So it would imply that the market cap already went from about $2 billion that it is now to about $30 billion of what AMC is now, and then adding another $15 billion, which is where the 50% comes from, and that's how much the shorts are losing. And to just show you guys what I mean, the total percentage gain if no squeeze were to occur would be about 1,500%, but if there is a short squeeze, the total percentage gain is 2,384%. And just to show you guys that the math checks out, we take this total percentage gain without the squeeze, we multiply it times 1 plus 52.84%, and we get 2,331% increase, which is more or less the same as the number we had before. So don't get discouraged by the small short squeeze percentage increase, because we're squeezing off of an increased market cap. Hopefully that all makes sense for you guys. I tried to basically illustrate it at the end, and it really just shows if there is an absurdly large market cap increase for Workhorse based off of retail investors buying it up, the shorts would be in the hole for much more money than for what AMC shorts are in the hole for right now. What AMC truly has going for it is the fact that most people have shorted at around $10 per share. So with AMC currently being at around $60 per share, it really puts shorts in the hole right now, which means that it's more likely to get a squeeze than for Workhorse, where the average price for shorts is around $12 per share, so they're only down a couple dollars right now. But with all that being said, if Workhorse was to really increase and more people were to buy it up, shorts would be in the hole for much more money than the shorts are in the hole for right now with AMC. So keep all those things in mind. I hope I did a decent job of explaining what's going on right now. I hope you guys understand the average days to cover metric, as that's a very important thing in determining how much money the shorts are currently losing, and with that you can predict how much money you'll get from an actual short squeeze. So with all that information, yes, the short squeeze is currently more likely to happen with AMC, as the shorts are definitely in the hole for like hundreds of percent. So I hope you guys were able to follow that and understand the differences between the AMC squeeze and the Workhorse squeeze, because a lot of people just see that Workhorse is set up much better than AMC, but they don't realize that these AMC shorts are in the hole, have like an average price of $9 per share. So they're in the hole big time. So I hope you guys understand basically the differences between the AMC short squeeze and the Workhorse short squeeze, because currently it looks like Workhorse is set up for a short squeeze much more than that of AMC. However, when you take a look at how much these AMC shorts are actually in the hole, they're in the hole for about $50 a share, compared to Workhorse, where they're in the hole for about $2 per share. So if I were short on AMC, obviously I'd be stressing a lot more than Workhorse, because I'm just that much more in the hole. However, at the same time, I think Workhorse is set up much better than that of AMC. And if Workhorse were to increase in market cap a lot, just like how AMC increased in market cap a lot, the shorts would be in the hole for so much more, and the price would absolutely explode that much more. So with all of that being said, take it as you will. That's the comparison of Workhorse to AMC. That's all I really have for the video for you guys today. I hope you guys enjoyed. I hope you guys learned something new about short squeezes and short interest, and that's gonna be it. Peace.